U.S. Federal Reserve holding its annual symposium this week at the Jackson Hole Resort in the U.S. state of Wyoming. And with the U.S. economy remaining sluggish, the euro crisis and the general global economic uncertainty, the expectations for Fed action are high. Craig Mauro has more on what we can expect from this weekend's retreat.
The Jackson Hole retreat is typically not used to announce policy decisions, though many economists expect the Federal Reserve to at least give some signals of its coming intentions. Markets have rallied over the summer. The Standard & Poor's 500 index is up 10% since June 1st, partly on expectations of more central bank stimulus, and hopes are high for Federal Reserve President Ben Bernanke's speech this coming Friday.
I think it's probable that he will announce the Fed's intention to exercise further stimulus to perk up the economy. That would take the form of additional open market operations to buy Treasury bonds.
The minutes of the Fed's last meeting at the end of July indicate that officials are prepared to, quote-unquote, fairly soon provide new stimulus. Now, since then, officials have been calling for more stimulus, including the president of the Chicago Federal Reserve Bank, Charles Evans. He made a speech in Hong Kong on Monday calling for immediate new stimulus, saying that the Fed should be prepared to buy bonds for as long as it takes to make a decline in the jobless rate here in the U.S. Whether or not the U.S. Central Bank announces new actions this week or at its next open market committee meeting in mid-September, its principal remaining option could be what some refer to as open mouth policy.
The truth being said, they've already done pretty much what they can do in terms of classical monetary policy easing, and there's not a lot more they can accomplish, but they except talking about it, in the hope that that will maybe spur greater confidence of consumers and business to spend and get back on track.
The U.S. economy has shown some signs of life. The pace of job creation in July was more than double the April through June average, and housing prices jumped the most in the second quarter of this year since 2005. But with unemployment still high and economic growth sluggish, all eyes remain on the Fed. Craig Mauro, CCTV, Chicago.